Welcome to another 21 Hats Dashboard, brought to you by our sponsor, The Great Game of Business. I'm Loren Feldman, and I'm here with Tracy Bech to talk about the things we think business owners should be following this week. Tracy is CEO of Starboard Collectives, which facilitates CEO forums, and she co-authored the latest edition of the 60-Minute CFO with her father. Welcome back, Tracy.
Hi, Loren. Thanks for having me.
Oh, it's a pleasure. Great to have you here. Tracy, given that you were raised by the original author of the 60-Minute CFO, I'm assuming that you were pretty comfortable with financials when you first started running businesses. Am I right about that?
No, that is a false assumption. I wish I was, but no, not at all.
How did that happen?
You know, it's funny. I think like a lot of entrepreneurs, I just have that mindset of I can figure anything out. And in the excitement of starting my businesses, I didn't give much thought to what is actually the language of business, which is finance. I was way more focused on really the product and services that I was selling. So finance always was a back of mind exercise and was living in the shadows. Also, I think, as you tend to do as you're first starting out years in the world, is you try not to lean back on or ask a lot of advice of your parents. You think I can do this myself, which was ultimately to my detriment. But I did end up learning it. I just learned it the hard way, all on my own.
Well, that's great. I bring it up just to reassure anyone who might be listening to this who is not fully confident in their ability to navigate an income statement or a balance sheet. Even, the co-author of the 60-Minute CFO was in that place at one point. What made you realize that you had to dig in and figure it out?
It was really when I endeavored on my second business, which was my first business was a web development agency, and it was services based. And we spun off another business that was inventory based, an e-commerce website. It's one thing to manage services because you don't have a lot of costs of goods or inventory that's sucking up a lot of your money, but that you still have to pay tax on. It's a whole nother thing when you start to trade in products and you hold inventory, and now your balance sheet is really a way bigger player in your business. And then cash flow becomes something that you can't intuitively manage. You have to really understand it from the way the income statement and the balance sheet play together. So that was when I decided I needed to take the leap into financial fluency. And I was like a cave woman. I didn't realize there was people out there who understood the physics of how you build a fire. I was still I was like figuring out how to rub two sticks together on my own. But did finally figure it out. It's just funny that's the way I chose to do it.
We've had some conversations on the podcast with people who weren't sure where their money was going and then realized it was all going into their inventory. Is that the experience that you had?
1,000%. Yeah. And it just was like, when you finally figure out that that's where the money is, it's like, of course, how could I have overlooked that? But it's amazing that in the day-to-day of your business, it's something that you do overlook. And what you're thinking is more in terms of those dollars out, dollars in, products out, dollars in sort of a thing. And you forget that you have investments, tied up in your inventory. So it is such a common plaintive cry of the entrepreneurs, where's I see all my profits, but where's my cash?
The last time you were here, Tracy, was about a year ago. And at the time, we were all kind of awash in predictions of a looming recession, to which you responded that you actually like recessions. Can you remind us of what you like about recessions? And are you disappointed that you didn't actually get one, at least not yet?
Well, the thing I like about recessions is that it sharpens your saw, whether you want to or not. So you have to get down and dirty and really understand where your margins are and how you're going to succeed, even if the soil isn't super fertile, right? You have to find a way to do it. And I think that going through a recession is just one of the best exercises you can do to make sure that you're trained up for when it's not a recession, right? And then it makes life so much easier. I am not disappointed. So, that being said, although I don't want to overlook some of my clients who are in certain industries have experienced a downturn, and that's more based on industry. It's industry to industry. So what I've seen is the more diversified your business, the better you have fared in those situations, for sure.
So here we are in the dog days of August, well into the third quarter. Is there anything in particular that you think business owners should be thinking about as the days tick away, given where we are in the cycle?
Yeah, for sure. So this is an interesting time of year because we're just over the halfway mark. And so we have about a half a year of history. We know what's happened. And then we have about a half a year that we don't know. And I was recently with a client and was reminding them that every month that we look at financials, historically, we still always want to bounce it off what we think will happen. And they were like, well, it doesn't really seem like that matters so much. I mean, what's the point of doing this? And the point is that we want to know how we're tracking, right? And history hasn't been written yet. The year is not over yet. So whether we're high, low, or somewhere in between, it's a really great time to figure that out right here and now. And because we still have time to change it if we don't like it. So that is to say that I'm assuming that you've done any kind of projecting. And if you haven't, now it's still not too late because you also have a really great a lot of information from what's already happened this year. So it can further inform you if you haven't already done a projection.
That's an interesting thought. That wouldn't have occurred to me. So even if you didn't do projections going into the year, you don't think it's a waste of time to do them now for the rest of the year?
No, it isn't. And you'll never hear from me ever that I don't think you should project something at any time. It's not just this time, but this is such an interesting time because you really will have a pretty good guess. And I also don't advocate just doing one projection. I like you to do three. And so those are your worst case, your best case, and then something in between, which hopefully is, maybe most likely. And that can really frame up how you're feeling going into the second half of the year. And also, each time you review, so that if you get to September, October, November, you're going to know which way you're tracking. Are we tracking towards best, worst, or most likely? And it just takes a lot of that head scratching out. It takes away a lot of the panic that can also set in if you're not meeting your projections because you've already thought a little bit ahead as to what you might do in that situation. So it sort of fast tracks you into strategy and problem solving versus, oh my God, what are we going to do? We didn't expect this at all.
Yeah, I talk to a lot of business owners, many of whom are very comfortable doing projections, have been doing it for a long time, don't expect it to be exactly right, but are comfortable with the process. And I talk to some who are just completely flummoxed by it. Like, I have no idea, when the phone's going to ring or someone's going to walk in the door. I just don't know where to begin. Do you have any advice for people who don't know how to get started with projections?
Yeah. First of all, it's not projections or planning or strategic planning or forecasting are buzzwords that sound scary. It's let's just take away all of those words. It's guessing. Right? It's making guesses. So guess at what might happen. And you can be very broad to make your first stab at this. In the book, we walk through it step by step, but short of, having the book in front of you or going through that exercise, you at least want to start to project your revenue, right? Like, how much do you think you're going to bring in? Do that. Do a high, low, and something in between. And then once you've kind of started doing that, you can ask yourself a few more questions. What's the state of my industry? What's the state of the economy? What's going on with my competitors? What's going on with my customers? And before you know it, you're going to start to guess further down the road and say, oh, I think we're going to, sell X amount of these services or these products. I think it's going to either go up or go down based on what we've seen January through July. And you'll be surprised at how quickly you've actually mapped out what's going to happen. So keep it simple, and it doesn't have to be fancy by any means.
I like using the term guessing. I think that takes some of the stigma away from it, makes it feel a little more comfortable. I'm curious, you mentioned thinking about the economy. I often bring that up in conversations, and I often get the reaction, like, I can't even think about that. The projections for the economy, like we were just talking about, the recession, are all over the place. I'm going to focus on the things that I control. I'm going to look at what I see right in front of me. I can't even think about that. I'm sure you've heard that. How do you respond to it?
Listen, I think that's absolutely fine. I want to avoid head in the sand thinking, but if it's less relevant to you, then it's really not something you have to focus on. There are plenty of things to take into account when planning. So if the economy isn't going to be a huge player for you, that's fine. Let's not try to be, economists about it. For some of my customers though, whose businesses really do have a lot to do with the rate of, borrowing, like how much you can borrow money for, they do care. And it's already going to be one of their leading indicators anyway. So it's just built in for them. But if it's not something that you've already had to take a lot of stock in, let's not just add it in because I said it, right? That
makes a lot of sense. You mentioned before that while we haven't had a recession, you do have some clients who have had tough periods. Here we are in August. Do you have advice for someone who's in that position, who's maybe trying to stick to a budget, but the revenue is falling short of what they had projected or planned for? What can you do?
Yeah, so you can still work on protecting your profitability. So the trick is to not create a race to the bottom by trying to outprice other competitors just to get the work. You have to be very controlled, methodical. You have to have a lot of restraint around just trying to win business for the sake of winning business. That would be the first piece of advice. We can't go and basically do work for break even or below break even, right? Just because we want to try to increase revenue. And the second one is, again, just really trying to know what are our margins? What do they need to be? And if we can't, we need to understand where we have any kind of give, right? So if revenue isn't going to go up and revenue is going to stay the same or lower, we have to make sure that we're still going to make money on the services we provide. And then there's those direct costs of doing our business that just no matter what, if you send a product out the door, it's going to cost you a certain amount of money, right? Or a service you're going to have to perform, you have to pay for a certain amount of expenses on that. And then the other category of your expenses are your fixed expenses, which is what we consider our overhead. Now, overhead is something that if we don't make an actual change, it will continue to kind of just be the same amount every month. For example, your rent, or your insurance. These things are fairly fixed and fairly stable, whether or not we have a lot of revenue or not a lot of revenue. And I would urge people to understand that if revenue drops a certain amount, we are likely going to have to take some action on those expenses. We have to think about cutting overhead at some point. And it isn't going to do it on its own. We have to take action. We have to do something. And that can be hard. It might mean letting go of some administrative employees, things like that. But if we don't do it quickly, it can really hurt in the long run.
I think the first thing you mentioned was the advice that just because business is slow doesn't mean you should take any work that appears. You need to be thinking about your margins, which obviously makes sense. But aren't there times where you might take work that doesn't have the margin you're used to just to keep people busy, just to have some revenue coming in, even if you might lose money on it, given the situation?
Well, I think it would depend. There are certainly times where if we think this is just one slow month, well, let's take certain amounts of certain margin work in order to make sure that these people are busy. If this looks like the foreseeable future, and again, this kind of comes back to planning, but if this is 6 months worth of keeping people busy, that's not worth it. And the third thing that I would add to that is don't do this. It can turn into a race to the bottom, right? So when you lower your prices, your competitors have to lower their prices and it just turns into a downward spiral. So really having some restraint there, ultimately it's very hard, but it's the smarter, wiser long-term business decision.
There's definitely only so long that you can take work with without a profit margin. That's clearly the case. Have you seen, among the clients you talked about dealing with a tough period, have you seen them do anything interesting, creative that you would note for us that has helped them get through it?
Oh, man, it's hard to think of anything in super particular that also that is maybe fit for public consumption.
Understood. Well, let me ask you this then. When you talk about reducing costs, one of the first places people turn to is marketing. And obviously, if you cut your marketing, that can trigger the race to the bottom that I think you're talking about as well. How do you address that issue?
I do actually have one group of some of the CEOs that I manage that are asking those questions, and they haven't cut marketing, but what they're doing is they're going super deep on the metrics around their marketing, and they're really asking themselves what's working, what's not working, and what should we do more of and what should we do less of. So yes, they are showing that restraint in terms of just pulling marketing numbers and instead being analytical and slicing and dicing it a little bit differently where they can. So I think that would be a really great first line of defense, is always within an analytical approach.
It's so hard with marketing because even in good times, it can be difficult to tell what's working and what's not. And even if something is clearly working, you don't know how long it's going to last before somebody changes an algorithm or something stops working for whatever reason.
So true.
So let me ask you this. If you were to see a recession looming in the future, would you have any advice at this point? I know you're not an economist, but I imagine you still think that's a possibility. What might people think about going forward?
Well, since we have some runway here, it's a really great time to do a full financial look at your company, right? When we talked about a year ago, there were two things that are both on your balance sheet that I recommended, and they basically revolve around being liquid. And so in other words, having cash reserves and lowering any kind of debt that you have in your business, right? Or making sure that they're very manageable payments that you have on debt. And I think that's, if we're being cautious and we're being recession minded, those are still two things that I would recommend. If I know that we have, some time, the next piece of this puzzle is what I was alluding to, which is analyze your profitability, right? The first thing that's going to increase your liquidity or any kind of cash reserves is having higher profit margins. So pretend like we, are in a recession, pretend that we are having a really hard time creating, a lot of profitability, and go through your income statement line by line. You would be amazed at if you have, income statements are packed with line items, right? And if you start to look at each line item as a percentage of your total revenue and give yourself the challenge of taking 0.1% off of every expense that you have on there, you start to get 1%, 2%, 3% savings in expenses that drop immediately to your net profit, right? So if you're running at a 10 or 20% net profit margin, you're going to go to a 13 or a 23, or, imagine if you can do, 5% even. That's a huge, and then when you translate that back to dollars, that's a lot. And those dollars you can keep in your business as retained earnings. And those are going to directly correlate to increasing those two ratios that we talked about a year ago. And that will position you not only really well for a recession, but just really well in business and in life. So I would recommend that any old time.
Tracy Bech is CEO of Starboard Collectives, which facilitates CEO forums, and she co-authored the latest edition of the 60-Minute CFO with her father. This episode was brought to you by The Great Game of Business, which helps businesses use an open book management system to help build healthier companies. You can learn more at greatgame.com. Thank you, Tracy. I hope you come back again in much less than a year and help us continue to explore the netherworlds of financial statements.
Absolutely, Loren. I would love to.
Have a great week, everyone.